Welcome to TradeTheNBI.com. This is John. This report is for the 25th. Well, let's take a look at it right away here. As we talked about, the concern was seeing steel coming down towards the cyan was going to produce some weakness. It hadn't quite done that. And the biggest question mark was going to be if we were going to get higher cyan. And you can see that that started to take place by the time the close happened. We've turned around and we're actually seeing a bit of a separation between the cyan, and we were talking about we would be looking towards wanting to short a dip of the steel below, particularly now that it's made a higher rise over the cyan. So any pop coming in here looks attractive to potentially want to take gains. So let's go look at the 50K. Likewise, we can see it here. The decay has taken place here, and now we're actually seeing a little bit of a breakdown from that. So in this particular case, we had the higher pivot go before. We saw the decline from there. Holding up okay, not bad. I mean, we can see where the stop is at 78 there for the 50K. This looks to have the potential for a little bit more downside action. So monitor that and be watching it. If we look at it from a 5K standpoint, some nice little moves up in there, but we can start to see the decay, lower peaks developing here, and then by the time the third lower peak, you really ended up with a nice downturn, turning around a little bit, got a little higher pivot there, and actually we've overtaken this previous one into a new zone, so it's been a nice little rise up there from the short one, but we can see the longer time frames are having a little bit more strain. So bear that one in mind. This is also something we noticed that was starting to develop. NASDAQ seeing the same kind of split. So Friday, and this is just something that we were waiting for. We saw the deep red develop right here, but we needed to have the sell signal. It was the opposite when you had the buy of the steel. We saw the beginning turnaround the other day. Now it's crossed below. Those are all the telltale signs of weakness. Nothing dramatic, just what it is. And more exacerbated even here as it crossed below there for the YM. So we would look for a little bit of weakness developing in there. Might as well take a look at the alert charts. Well, we've got an opportunity to see if we see a broader cross-section of cells. We started seeing a bunch more the other day, and continuation now. Some of those have moved into broader cell setups where it goes from the new cell to just the regular, and then you get a DP, which would be both the D Omega and PowerMo to having cell signals. That was the regular alert. Let's go to the NASDAQ because NASDAQ was starting to set up with them. Yeah, and see, we had the situation where you just had a lot of buys, and then that slowly starts to flip over to a bunch of new cells. Hit and miss though with some of them. There's still some decent buys out there. Did see a turnaround in a couple of the high flyers though. The Amazon one was great. Intraday gave the nice little sell for us, and that continued all the way through for the earnings. So we'll see how that opens up, but that was a nice opportunity to short. Let's go ahead and take a look at those alert stocks since I'm talking about before I go through the commodities. Some of the commodities were starting to show some weakness. So Apple, had no real issues with Apple, though now we see the deep red form in there, so we'll be looking for sell signals, and all we're looking for is just a retrace down here of the positive extreme. So that would not be too horrible. What is that going to be? Well, just above the yellow line right there at 94.70, so right around 95. Nothing dramatic. Take a look at Amazon, because intraday this produced its sell signal, and it was crazy because it started turning around, and we'd already had a brief sell setup going prior to. Day closed not too horribly, but for the intraday sell signal had already taken place. We had the cyan, red move below white, and actually stayed below that 7.5. Not terrific, but this wasn't a horrible end of the day. It was just the 15-minute chart and that. And what we were talking about is, your potential dip would be all the way down to the 330 positive extreme, and then ultimately, which is right down here, the dip below the red line, which would be right around 321. So those were the numbers there. Baidu also putting in the positive extremes. It just come down to that, but that red has been so strong along with the green. No issues with that per se, particularly with it being below We've liked it all the way through. When we do get an actual lower pivot in that, then we can talk about it. But it says making the higher red, just the opposite of what we saw there. On a couple of those other ones. Faz. Almost to the sell right there. Green crossing below, but you just had the rise above with the red, so that's going to hold it up a little bit. But you might see some weakness coming off that, particularly if we open up and start to dip below. It's going to form lower peaks. You've already got a higher peak developing here for the cyan, so that should start to present some weakness for there. Would not want to be going long that setup at this particular moment. Facebook, been nice, rising with the continuation there. We've been right on the edge with steel going up, making new higher pivots as well as higher low pivots, and it just broke away from that and continued higher on their positive extremes. Not ready for those to have any impact at this particular point. And Google, it's pretty much flat line right there. It's not been horrible. Still had green above rising. The dip with the steel though below tends to cause a little bit of weakness, and that's all that we're seeing. We had a positive extreme right there. We're looking at 590. Did we even get down to 590 with the low? The 590 177, not quite there, so potential for a little bit more on the decline. Netflix still been in its low category with this rising cyan and the steel having pivoted below. It's just a matter of waiting for the beginning turnaround of this. Particularly if it pivots anytime in here soon, that could be a very attractive buy because you'll make a higher green pivot at that particular point, and it wouldn't be hard to turn around and come back over this peak right here of just above negative 7.5 for the red. So I'd be watching that one, particularly if you get a steel above the cyan would be the ultimate turnaround. So not quite there with Netflix, but getting closer. Got to have enough time if you want to do those. And then we're looking at PCLN. It's been on the negative side of this with the cyan still above, so a dip of the steel below there will probably produce a new sell signal. It had been okay once you had the breakout of the red above the negative 7.5, but expressing a little weakness. Had gotten almost overbought, kind of easing off that. It's not horrible. Just doesn't look to play to any major advantage. I know for the 15-minute chart, gave a nice sell and finished lower on the rest of the day. At Tesla, there was nothing we liked about that, and the dip below steel right there signifies we should move a little bit lower. Also the green pivot lower. Still plenty of buyers in that you're seeing the red climbing above, but again, you have that expressed weakness. You got to be looking at the dip back down to low. And that's not a big range, so is there much you can do with that? No. But from an intraday standpoint, you can probably place some quick options on it for following the 15-minute charts. Twitter, yeah, likewise. It's just kind of moving along to the upside on this one. It's not horrible yet. You don't have the steel dip all the way below, and you're still having rising greens. That's making up for the reduced number of buyers from the steel. So, and the red's continuing to advance. But you got to watch that because as that narrows, that's going to definitely want to retrace back down to here. But again, not big range. So the risks are limited, and that kind of a dip down there on an extreme that's not below the red line. Yeah, that's when I start to look to sell puts to collect that premium because you got a little extra fear in there from the implied volatility, and usually they pay pretty nice from that. And then if you get the shares at or below that level that you want on a improved chart, that's the ideal setup. In fact, we'll take a look at that when we look at WLT and those from their configuration. So here we had the USO started to make the peak, then the cyan started to peak up first thing in the morning, and the steel continued its decline. Not great signals, and so it started to fade. And all it did was come back down to the ABM supports on there, and right about the same levels as to where it. We had one more right over here where it got yellow. It's not that they call for a retrace of the low, but you tend to get moves that come back into their field or sphere of range. TLT from the weakness that expressed here with dipping below, once it did open up, it moved down into the safety zone from here. You did get the spike up though of the cyan above, both red and white as well as the green, all a bunch of negatives all at the same time. So it really came back to retrace our positive extreme. Instead of the hand, we went the low. 113.94 range is still within the target for that retest of the positive extreme histogram. GLD, remember we talked about, I had it 125.13 there. Now it dipped right down below that, was perfect within that configuration, still expressing a little bit of weakness going forward here, but that should present some potential attractiveness. Now, the fact that the green has broken below this low, probably going to see a little bit more, and that's why I say you wait for a move above 25 becomes that benchmark to go ahead and go long on the oversold here if you get an improvement in the extreme histogram. But as of yet, probably expect a little bit lower to take place before that turns around. In the euro, we could see that we were not in a buy. It was not turning around. Yes, we had the bifractal show up, but it wasn't quite there. That's why I mentioned you can watch your intraday, because this spread on all of this still looks fairly ugly. But could be very close to turning around, creating the buy. You've got to get above with the green here, that negative 18. This is getting way low there. It shows the exacerbated runoff on this. Not quite done yet, and kind of interesting because this is all part of the fear element that rates in the U.S. and that may have to rise a little bit earlier than some people anticipate, and or may effectively end up doing so, whether the Fed wants it to or not, and that will directly impact some of these other things, because it would certainly make European goods and things more attractive. Don't see it as a negative to the economy as much, but I know that it's a problem for deficits, because with the mounting debt the U.S. has is still a huge drain on economic growth overall, and that gets into a big macro discussion. But needless to say, actually I think Greenspan just had an article came out where he talked about that too, because the capital drawdown from these deficits is enormous, because it's easier for the banks still to be loaning to the federal government than to regular people, just because of the risk factors, and that's definitely hampered growth because businesses haven't been investing as much as they've been buying back their shares, which is why we continue to have these nice elevated prices. So X positive extremes all the way back over to there. Not there yet because it's still riding. You get a little weakness with the both declining steel and declining green, and you see the result of that. Intraday it was nothing special either. CLF likewise was doing okay, and we'd risen into the new zone, and it started to express some weakness within that, and the continued decline of lower pivots with the steel, and then finally it exacerbated itself with you had both steel falling, green falling at the same time, cyan rising, and then it just retraced all the way back down to this dip below the red line right there. So far on higher extreme, it's going to need to turn around pretty quick, otherwise that's going to break below that 15. And there it is from a daily standpoint. Still looks okay from a daily with the green well above. Steel is above cyan, so there's a lot of daily things, and it's just trading in a range right here. That's all it's doing, nothing special. We talked about WLT, had the cyan, we talked about that was going to turn around. It's just a matter of waiting for it. Opened up, pivot up, higher on the extreme histogram. It was worth a play, and nice reward off that. Yeah, it was a bit extreme all at once. Will that probably retrace? Yeah, but it was still a great play. You have a little bit of weakness here, but you're still having rising red, so I'm not too concerned with that at this particular point. It was a nice play overall. And this is the whole thing. A lot of these aren't really reacting to news of any kind, and they're just easily manipulated. And it's just a matter of seeing where the algorithms are going within their setups and following it. There you have it. I mean, that pretty much covers it. I thought we should look at the 50K real quick while we're at it, because, again, like I said, still expressing some weakness within this. If it holds up, that's fantastic, but definitely should be prepared for it. And you can see where the stop is. Now, the stop would only take place in effective if we're in a sell configuration, and we are in a sell configuration with the cyan this far above, and that you expect more weakness than you do positive. So I'm not expecting a breakaway at this point unless there's some dramatic spike up and you end up with the cyan caving really quick and rolling down. So there you have it. As always, though, continue to look for me on private Twitter feed stock, because I'm really behind on some emails. I got to get going to those and finalizing those changes to the alerts. It was a little setback with how it changed what shows up on the alerts, so I had to go back and redo a lot of that stuff. So it's been little bit of a time-consuming pain. And then coming off of Rome and the big discussions on some of the adjustments to the algorithms that I was talking about with a few of the others that I have contact with on the leading edge of algorithm constructs, and our wonderful discussions on equating how much we can expect from, and this is an interesting one, market rise based on the debt factors within the Fed in the U.S. Because the Fed balance sheet has just been expanding, and oddly enough, as that has to get unwound at some point, could have an interesting effect on the markets. A lot of people think to the detriment, but that may not necessarily be the case. So we'll have to delve into some of those issues another time. But anyway, as always, trade well. We'll talk again soon.